Hi and welcome to the Bullion Report for Monday, January the 14th, 2013. The gold and silver price are a little out of sync. Today's gold show was welcome, pretty etc., but settled nothing. It did take the gold price over its 20-day moving average of $1,660.92, but not by much, about $2. To convince the doubters, gold must climb above the last high at $1,695.40, and before that, the early December low at $1,684.10. On the sunny side, gold has formed largely a falling wedge, which generally breaks out to the upside. Also, the spike low to $1,626 on 4th of January prompted a big rally, and that day closed $23 higher than that low. Friday, I should not overlook, it appears that the nice government men, or the crooks who run the rigged games in Washington and Wall Street, struck about 9:30 a.m. and slammed the gold price down on the heels of the rally that had taken it to $1,677.30 close on Thursday. No matter, gold's sinew was proven by today's comeback. It was, however, stopped at $1,675. So, to be nice if gold would oblige to us by closing above that mark tomorrow. The silver price is tugging at the leash and longing to run upward. The gold to silver ratio fell today to 53.697 from Friday's 54.665. It's down 1.8%. There's more to. Silver closed above $31. High came at $31.14, but silver's held on to most of its gains. It needs to build on that gain tomorrow. More witnesses are testifying that the lows on 4th of January were the lows for silver and gold corrections that began in October. But whether they are or not, you'll need to get your head straight about these corrections, the fluctuations and disappointments. They don't mean a hill of beans to us. All the loss there is imaginary, just like every gain is imaginary until in fact you sell. If you thought silver at $8.80, if you bought silver at $8.80 in November 2008, you haven't lost a blessed thing in all these fluctuations. Just imagine the sting of marking to market. Well, what's the point? That we are not following a day trading strategy. So it isn't in fit focus of daily changes. We are following a primary trend strategy, which means we climb onto that bull and ride him until he falls over. We don't want to blow a lot of money by trading in and out. We just hold on to the bull and ride that rascal. And that also means that about now is the time to buy more. Or you can wait till silver climbs over $32 and gold above $1,705. And you have more confirmation in hand. Don't miss what platinum and palladium have done. Platinum rose $27 today to just about close the gap with gold. You'll remember the platinum-gold spread went negative back in October 2011, and save for a few weeks, it barely poked its head above even and stayed there. Looks like the opportunity to swap gold for platinum that I mentioned several times has just about passed. I would call a move to platinum-gold spread to be bullish for all metals. Palladium has dropped as low as $667 on 8th of January, but has climbed back nearly $40. I don't trade palladium because it's too quirky and herky-jerky for my taste, but a close above $728, which is early 2012 high, would release palladium from its long imprisonment. The US dollar index has given up all the gains of its rally in 2013's early days and fallen back, not quite through the downtrend line it broke for that rally. That line stands about 79.40, so a close below that gains, say, further rallying. A close below 79 sends the dollar searching for the bottom The Marianas Trench clawed back 12.1 basis points today to close at 79.518, while the dollar suffers the euro accelerants. Last week rallied up through its 20-day moving average and gained $1.3065 to $1.3381, rose of 0.29% today's alone, aiming for $1.35, maybe $1.36. Is there no bottom for the yen? Today it made a new low and crossed at 111.70 cents to the yen 100, down another 0.39% today. Everybody in the known world and remote parts of Antarctica must be short the yen. And look, the Japanese politicians and the Bank of Japan have accomplished their purpose, running down the yen's exchange rate without moving anything but their jaws. Neha. So, just to catch you all up, the breakout of the 10-year bond yield has now toughened back to the downtrend line. It's wholly unclear as yet whether this marks a long-awaited bursting of the bond bubble. Well, stocks just keep on bubbling and bubbling. We never see a sign of an economic basis for the mania. Never mind, well, we live in the age of illusions where only appearances count, as opposed to an age of illusion where only literal references count. The Dow today rose 18.89, that's 0.14%, to climb past the 13,500 milestone and rest at 13,507.32. The S&P 500 lost 1.37 to $1,470.68. I still expect that both of them will gain more yet, probably hitting or exceeding the old highs. This move will run out of steam by April Fool's Day. Do not miss the fact Dow, measured either in gold or in silver, has fallen in the last 6 trading days. No new highs in store there. So that is today's BullBullionReport report for Monday, January the 14th, 2013. This is a quick warning and disclaimer. Be advised and warned. Do not use these common strategies to trade future contracts. I don't intend them that or write them with such short-term trading outlook. I write them for long-term investors in physical metals. Take them as entertainment, but not as a timing service for futures. Nor do I recommend investing in gold or silver exchange trading funds, ETFs. Those are not physical metal, and I fear one day or another may go up in smoke. Unless you can breathe smoke, stay away. Call me paranoid, but the surviving rabbit is wary of traps. Nor do I recommend trading futures options or other leverage paper gold and silver products. These are not for the inexperienced. Nor do I recommend buying gold and silver on margin or with debt. What I do recommend, physical gold and silver coins and bars in your own hands. So that concludes today's report. Be sure to subscribe to our YouTube channel, like this video, and share with anyone you know that invests in the bullion market or anyone that's looking to invest. Again, thank you very much and see you in the next show.